Hello, this is Dave, and welcome to Equity Story. And obviously, this is just a general shared advice and not personal advice. I look forward to seeing you at 12 o'clock today. We've got Ask the Analyst Live. Please be there because I've got the brilliant Raymond with me today, who is another part of the infrastructure and the family we've got here at Equity Story. And Raymond Jang is absolutely amazing. It's another Claude Walker. So get your questions ready, and we'll get going at 12 o'clock. Um, Meanwhile, on TradeWatch, you know, I always say, what business are we in here at Equity Story? We're in the money business. So, Dave, with everything looking so bad, where are we going to make some money? Okay, I've got some ideas, so let's talk about it. The first thing, we'll just have a look at the markets in general, and you can see the markets were off heavily overnight. And again, you've got the Dow off, and the markets on the charts, they look like they're obviously going to retest their lows, and one would imagine, I think potentially they're going to be going a lot lower. And you know what? Why wouldn't they? I mean, poor old Powell. The Americans have got runaway. The inflation, whether it's runaway, it's fairly runaway. They need to get these interest rates a lot higher. And guess what? The news was last night. The market's doing very well. U.S. retail sales jumped in August as auto sales rose, and restaurants were swarmed. That's not there's not much of a slowdown going on there. The U.S. Labor Department reported initial claims for state unemployment benefits fell for the week ended September 10 to lowest level since the end of May. Whoa, whoa, whoa. Poor old pal. He's just not being helped. I mean, how can he be? He's got like I said, the worst maybe president the U.S. have ever had in Biden. All Biden's doing is just stoking inflation, and I'm sure those restaurants are full of those uni students. He's just given all those, taken all those loans, said they don't have to repay them anymore. So these interest rates are going higher. The general market is going down. It's most probably going to go down a lot more than what we realize. And this is a time, I'm not going to repeat it. If I get one equity story member that is not prepared for this, well, you're going to be in the naughty corner because the market's going down and the shakes, I think the big shake, markets they tend to move before the event. Markets are forward thinking. So I think if as soon as it clicks to the market where things are going to go, hopefully we'll get down to these lows fairly quickly, and possibly those lows again could be around that 20,000 on the Dow, maybe another 30-40%. You know what? If it's not, and there are certain events that can change this. Certainly, I think a bigger war in Europe can change that, where money tends to move in a different way, and you'll get a lot of money coming out of Europe going into safer stocks in the Dow, which will help support the markets. But I think as we see the situation at the moment, these markets are going to be going a lot lower, and and again the same story really in our market. We're like sort of really we're like a not quite as bad version of what's going on in America. We've got our problems. We've got fantastic employment numbers. It's not helping. I think we saw Maya yesterday come out with some of the best retail numbers ever. There's a lot of similarities there, and I think definitely, America sneezes, the world catches a cold, and we have to be extremely careful. So now I've given you the bad news. Of course, there's always places to make money, right? There's always something trending, or there's always something looking good. So, what do we quite like at the moment? And energy, long energy, right? It has to be the place to go. And it's absolutely amazing, really amazing that, under Trump, America, the strategic reserves they have were full. America was self-sufficient on oil and gas, and it was actually looking to export. Under Biden, it's just he's taken the whole. I mean, we're very renewable, we're very green orientated here at Equity Story, but he's taken it too quickly and too fast, and of course he's nervous, and he's been going into all the strategic reserves in the US of A. And guess what, guys? There's only 434 million barrels left. The lowest level, it's unbelievable this, the lowest level since October 1984. And I think he's taking out about 1 million barrels a day. So the way this is going on, um, there's going to be a massive, massive spike sometime in the price of oil if it keeps continuing this way. There's going to be an energy crisis in America. It's really, really, really serious. Um, and I think the real money we can make at the moment is trading around the Biden policies, these ridiculous policies that he has in play. So yeah, there's a lunatic in charge. We've got to look at what the lunatic's doing and try and make money around it. And that is why I like oil. I like gas. And we've got two stocks in our market, which is Woodside and Santos. And I think any pullback, and what we are seeing now, I'll get the crude oil chart across. We are seeing this quite a decent pullback, aren't we, in on crude, and it most probably could go lower. It could maybe come down to that 70 level, or it could hold around here. But at the end of the day, I think any weakness that we're going to get short term on the price of oil is just going to be an opportunity to buy these sort of stocks like Woodside and Santos. So yeah, with these strategic oil reserves, the war in Ukraine, all the issues we're seeing in Europe at the moment, energy, energy, energy. Surely, surely we buy it on weakness. Okay, just going to leave you with that thought. And again, the stocks to go long on for me are Woodside, Santos, the two best. And interestingly, actually, little STO did have a uh, valuation come forward today. I'll just have a look at it, and it was reasonably actually bullish. And Macquarie put an outperform an STO, and target price of around $10.60. So it all helps. So very, very pleased to see that. Um, and what I would say, AGL, again, this is a little bit down with the oil price, but I mean, you got to love that chart. Look at the price action. Doesn't that chart look like that again, right? Um, and they had a little bit of good news as well. So I don't know if the market's really picked up on this one. Um, and I'll just try and get it here. Okay, I'll bring it across. So they've got a new energy chief, Jacob Rees-Mogg. I've seen this guy talk a few times, and the greenies aren't very happy because actually, if you read the article, he's very pro at the moment. Fracturing, and he says on hydraulic fracturing or fracturing, Rees-Mogg said, if we're sitting on tons of gas, that seems quite an interesting opportunity. So, it's all starting to line up for this little story, AGL. Now, there is risk there. And of course, these assets are worth in the billions and billions of dollars. So there's talk like they're, I don't get, but a lot more than where the market cap is. So I think it's a very, very interesting story to keep an eye on. Now, the market is tough at the moment. And, I was interested today, and I'm going to talk about the banks. Because we don't like the banks, right? We know, and I'm going to put them all on monthly charts, right? We know the banks are sort of sideways, they're sideways moving, and they tend to trade in a little bit of a range, don't they? Um, and if you look at Westpac now, it's back trading where it was back in 2004. So really, that's 20 years you'd have been in Westpac with no growth. Okay, nice little dividend, but that's as far as it goes. But you know what? I think it is these banks that are starting to look at the bottom of the range, and you've got Westpac actually giving quite a nice little dividend now, about sort of 5.61%, trading around 15 times. You've got Bank of Queensland. You need to check when giving about a 6.3% dividend, trading about 11 times. You've got ANZ, 6% dividend, trading about 10 times. So a lot of the brokers are saying the banks are starting to look interesting, and the reason they're saying that is they think we're going to, obviously, high interest rates, we're going to have a liquidity event, and they're saying the banks are very, very well positioned at the moment to go through this. This is not the way, this is not really CTM, it's not how Equity Story trade, but what you can do is put these banks You can put them. You can see even sort of look at even Bank of Queensland, what is trading where it was back in 2002, 20 years later. But what they do trade in quite a nice range, and I think the low range or the lowest range has been 5, but there's been this range here where the stocks have settled quite a few times around this sort of 577 range. So maybe somewhere around here, if you're looking to buy these banks in some ranges, the banks could be quite an interesting investment. Plus the fact, things are going to get tougher, so maybe there's going to be a little bit of how do you say, people are going to feel a little bit secure in some of these stories. And again, if you look at something like ANZ, it's traded, generally speaking, hasn't it, between that, I'd say that 20, maybe the worst, and say more of an average range, maybe more between that 20 and 30. So certainly anywhere down near that $20 level, maybe if you've got that long-term point of view, it's absolutely fine. And Westpac as well, we can have a look at Westpac. And again, look at Westpac, it really trades, doesn't it, between that 20 and 30 as well. So you could argue that if these brokers are right, these banks could be quite an interesting place to look to make some money. So two really good ideas there. I'm just going to end on a third one, which is SWM. And the reason I like it, I mean, our lead analyst, Mr. Wolfie, very, very fond of the story, very fond of the fundamentals about the story. Times are tough. What do you look for? You look for stocks which are not overvalued. And I think trading, 6 times from memory. SWM, again, had UBS, came out and, as again, reiterated 85 cents target price. So it's nearly 81% higher than actually where it's trading. Um, and and what they say is that the standard media index data looking forward for bookings for September point to growth in ad demand, with nearly 90% of last September's total ad spend already confirmed. Specifically, there's a very strong demand for both TV and outdoor media. So I think, the industry isn't quite as bad as what people think. Maybe what you can wait before you buy this little SWM, you can wait maybe till it bounces over that 52 cents level. Just give it a little bit more feeling that the markets are going to go on with it. But yeah, again, well done, Wolfie. He's got that one right as well, and it's looking extremely good. Now, we didn't have much news that came out today. In fact, there was little to report about. The interest again is in the lithium plays. They are getting a little bit of a sell-off today, possibly just an opportunity. We did like a few stories maybe to have a nibble at. I was looking at CRN. I look at AAC. I think just because of the market pullback we got at the moment, just wait to see if I've got them on Einstein's on the weekend. If I've got them on Einstein's, they're good quality companies, then have a look. But really, I need to see a little bit what the Dow does tonight in America, and I want to see where these close today on the close on Friday before I make a call on them. Simply because these are really, really tough times to trade. On that note, thank you for listening to Equity Story, and see you at 12 for Ask the Analyst Live. Thank you. Bye bye.